Hello traders and welcome to another video review. Today is Wednesday, December 7th, 2022. Let's find out what is going on the Forex calendar. We got the GDP data from the Australia released already. Those data are for the third quarter and they are worse than expected. Actual reading was 0.6%. The previous reading was 0.9% and the forecast was 0.7. So disappointing data from the Australia. We'll definitely take a look at the Australian dollar later on. Interest rate decision in India, as expected, 6.25, increase of 0.35 basic points. But the key event of today is the Bank of Canada interest rate decision, which is scheduled for release at 4 p.m. The previous reading was 3.75%, and the forecast is that the Bank of Canada will hike the interest rates 0.5% towards 4.25. So any hike bigger than the consensus will be a big surprise for the market participants. And at the end of the day, we got the crude oil inventories from the US scheduled for release 4:30. As you can see, the crude oil inventory is supposed to shrink to minus 3.3 million. So the calendar doesn't look very busy. However, we got very important events ahead of us, and some of them had been published already. So let's take a look first on the technical situation of the US dollar to the Canadian dollar first. So what do we have here? As you can see on a 4-hour chart is a very nice movement to the upside. We had bounced from the local technical support located at 1.3645, and the market is moving higher. The next target should be located at 1.3806. This is the local high from the 3rd of the November. Nevertheless, this rally might extend even towards the level of 1.3852, which is the local high from the 21st of the October. The level of the 1.3645 will now act as the local technical support. So what we actually see on this market is a very strong bullish momentum to the upside. Right now the market conditions on the 4-hour chart looks very good. However, they are extremely overbought. They hit the level of 74 points. This means that the next leg higher might see some kind of a resistance from the supply side of the market. So we might even expect some sort of the pin bar to be created soon. Nevertheless, we are trading above the yesterday's highs. The local high was made at the level of 1.3699, and we are still going higher. Nevertheless, the pullback is due on the US dollar to the Canadian dollar. So maybe the interest rate decision, the Bank of Canada interest rate decision, will trigger some kind of a movement to the downside. Nevertheless, please notice the fact that there is still plenty of the pips to be gained to the upside. As you can see, the local trend line is still valid. The market respects this trend line. So as long as we bounce from this trend line, the outlook remains bullish. So we got the data from the Australian dollar. So let's take a look at the Australian dollar to the US dollar pair. So what do we have here? Well, the first thing you would like to point out is that the momentum is very low at the level of 38 points, definitely below the level of 50, which is the neutral level, and it is approaching the technical support at 6,642. In a case of a breakout to the downside, the next target is located at 6,589. So it looks like the local high made as a pin bar here. As you can see, this is a pin bar in form of a doji with a high at the level of 6,803. might be 6,853 might be the last high during this very nice uptrend here. And the local trend line, let me just put it on the chart. The local trend line, as you can see, had been violated as well. This local trend line has been hit already here, and then of course here, so it provided the technical support for the bulls. Nevertheless, sooner or later this kind of a weak trend line, internal trend line, had been violated. Now we are poised to the downside. Targets are on the chart. What is going on the oil market ahead of the data release? So not a good situation for bulls. We just hit the extremely oversold market conditions on the 4-hour chart. We made a new local low at 72.75, which is the new lower low, because the last one was made on 28th of the November 2022. So right now we continue to move basically lower. I'm trying to find out where is the next technical support for this market on the 4-hour chart. However, it looks like there might be we need to look at the daily temperature, because on a 4-hour I can't find any substantial support. And there you go. As you can see, the downtrend continues after the big rally here during the end of the 2021 and the beginning of 2022. Now it is a history, and I think that this technical support that you can see here around 73.45 had been violated. So the next important target for the crude oil is located with the lows of the December 2nd 2021, somewhere around 62.43. So this is it, and this is the level that we should take a look at. 62.43 is the next target for the crude oil. It might be hit quite soon, because as you can see, during the last 4 days, market has fallen from 82.97 to 72.75. So that's over $10 per barrel, of course. So the outlook remains bearish, but as I said, the market conditions are now extremely over. So please be careful with the downside, because we might see some sort of the bounce higher, preferably towards 83.44 level. Nevertheless, bearish pressure is strong, even despite the fact that we are on the extremely oversold conditions on the 4-hour chart. This is daily, and I think that the bounce or the pullback will be only kind of a intraday bounce. So please do not expect any kind of a trend reversal yet. We didn't hit the key targets on the crude oil, and everything is ahead of us. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.